Hey guys, Joel here. I'm sure that some of you watching this video have had the luxury of blowing up an entire trading account, just like users on Wall Street Bet who make crazy insane gains and then end up losing everything. My hope is to try and help you avoid making such massive losses by showing you exactly how you can consistently grow a small account without having to go through an emotional and financial roller coaster. So if you'd like to learn more, consider crushing that like button, subscribe and turn on the notification bell so you can get notifications of our videos when we post them. Now, I'm going to go over 6 different points which I believe are critical to help you achieve the goal of consistently grow your account. The first thing is risk tolerance. Guys, you have to be able to ask yourself the question of how much risk can I tolerate? Because this will help you determine how you're going to manage your emotions. Because I'm not going to lie to you, emotions play a big role in trading and investing in general. For example, have you ever been in an instance where just the moment when you decide to buy a stock, that's when it starts dropping? I've been there myself, have felt that way too. But here's the thing, if you know how much risk you're taking and you are willing to tolerate, this will basically help you not to panic sell when the stock starts dropping right after you bought the stock, because in this instance, that would mean that emotions are taking over you. And if emotions are taking over you and then you end up panic selling, that means that you're never going to be able to execute your plan. And that becomes a problem, because if you cannot execute your plan, you cannot reach your goal of consistently grow your account. The next thing, still under risk tolerance, is it will help you manage your wins and your losses. What do I mean by this? This means that with your risk tolerance, wherever that is, you can basically determine what percentage of your account you are willing to risk every time you enter a trade. Let's assume that you have an account of $500 and you also decide that you're going to risk 5% of your total account every time you enter a trade. In terms of the math, this means that on a $500 account, every time you enter a trade and you lose $25, you're going to automatically and directly exit that trade. But also, this also helps you manage your profit, because if you're telling yourself that my maximum loss is $25, then that means that also basically helps you determine where you're going to set your profit. So if you are willing to lose $25, you will have to shoot for a profit of at least $50 and above. Why is that? Because let's say if in one trade you make $50 and then in the next trade you lose $25, well, net you just made $25, right? Because you don't want to make $25 and then on the next trade you lose $25. Well, guess what? You didn't do anything, because now you're back down to zero. The second thing that comes after you have set your risk tolerance is what to focus on. This is where you determine exactly where you're going to put your primary focus. Are you going to focus on only trading stocks? Or are you going to focus on only trading options? Or are you going to use a combination of both trading stocks and trading options? And here's the thing. You need to know that stocks by themselves are risky. And so trading options, it's even riskier because you're trading options on a stock. And also what I like about options though is that options give you leverage. And you might be confused, so now let's start by explaining what options are. So basically, an option is a contract that gives the options buyer the right to buy or sell 100 shares of that stock at a fixed price, or commonly called a strike price. So what I meant by leverage is that options allow you to control 100 shares of a company at a cheaper price, versus if you were actually going to have to buy 100 shares of that company based on the stock price. If you would like to learn more about options, please make sure you check out my brother video on how he made $11,000 trading options on Robinhood. So I will link that video above and in the description below. As we're moving on, the third thing here is how are you going to manage your funds? Assuming that you're starting with an account of 500, we will divide the account in two. We will take 4/5 of the account, which is $400, and set it aside for trading stocks. and then take the remaining 1/5 of the account, which is $100, and set it to the other side for trading options. So now you're probably telling yourself, how am I going to trade stocks with only $400 and options with only $100? Here's the thing. For trading stocks, we're probably going to have to focus on trading penny stocks, and I will bring more about that later on in this video. So just stay on with me. Now, how are you going to trade options with $100? You will probably have to focus on trading options on stock that have cheap options contract. So here's an example. One of the stocks that have cheap options is Bank of America. And this is one of my favorite stocks on trading options on. So for example, I'm going to show you a trade that I made back in September on Bank of America. So I bought 15 options contract on Bank of America expiring on the 18th of September. And each contract was worth $12. So 12 times 15, that's $180. And I was able to grow that money from $180 to $375 for a net profit of $195. So you see here that even with $100, let's say instead of you buying $180, which I did, right? If you only have $100 set for options, you would maybe spend like $96 to buy only 8 contracts, and you would have been able to make money here, right? Once you are decided on how you're going to manage the funds available in your account, the fourth thing is planning your trade. Here, you need to be aware of the 3-pattern day trader rule. It's basically a rule that says that for every margin account that is below $25,000, you are only allowed to have 3-day trades per 5 calendar days. So then, in order for us to get around this rule, what we're going to do is we will only have a maximum of 3 trades a week. So then we will have 1 day trading and 2 swing trading. On your day trading, you will focus on day trading penny stocks. And on your swing trading, you will focus on swing trading penny stocks and option. Guys, please don't day trade options, okay? Leave it to the experienced trader like me or my brother or, other experienced trader, because day trading options is very risky. And if you're just starting off, you probably don't want to do that. Please just swing trade it so you have enough time to make the money that you want to make. Once you've made a decision on your trading plan, the 5th thing is the trading strategy. Here, we're going to focus on 2 strategies. The first strategy is trading the catalyst. I call it trading the catalyst because you're going to use the Webull built-in function called pre-market gainers to find penny stocks that have been moving in pre-market before the market open based on positive news. So then, this will allow you to basically capitalize on any potential upside price action. And if you would like to learn more about this strategy, please make sure you go check out my video on how to make $100 a week trading penny stocks. And I will link that video above and in the description below. The second strategy is you're going to focus on stocks that have a pattern of going overbought and oversold. Here, you're basically going to use the RSI, which is basically the relative strength index, which is an indicator that tells you when a stock is overbought and when a stock is oversold. And so this strategy is suitable for swing trading stocks and swing trading on options, right? And so you can basically buy when the stock is oversold and ride it all the way up to when it is overbought, and you sell for a profit. And if you would like to learn more about this strategy, please make sure you go check out my video on how to fit swing trading in your work or school schedule. So I will link that video above and in the description below. The last and 6th thing is don't be greedy. Cut your losses when it's due, take profits when it's due, and please use stop losses and take profit orders so you can keep emotions out of your trading activities. And the last thing is, guys, please learn to stick to the plan, okay? Stick to the plan. Because if you always derail from your plan, you may make money in the short term, But over a long term, you will always end up losing money because you're not even being disciplined enough to follow your own plan. And that's really not going to help you. So please focus on making small but consistent gains, and that will help you basically compound over a longer period of time. Now, I hope that I've provided you with enough value in this video. If that's the case, please consider crashing the like button, subscribe, and turn on the notification bell so you can get notifications of our videos when we post them. Now, with that being said, I'd like to thank you for watching this video, and I'll see you in the next video.